Hey, what's going on, guys? Austin the Money here. Today we're going to get into the wash sale rule, a little bit about taxes, and the bullish IPO and the trade I made on bullish today. All right. So, as you guys, I'm sure, are aware, bullish IPO'd at $37. And by the time it went public around $89 per share, which is an insane, like 150% run up if you got filled in the pre-IPO, which I got filled about 17 shares or 19 shares, something like that. But there's the trade right here. I end up buying 100 more shares at around, I think, $90 right when it went live. And within, I think, 6 minutes or so, it had shot up to like 115. I went ahead and said, you know what? It was like $3,400 for realized, for not realized, but for a profit. And then when I sold, it sold at a really bad. It sold at 110, even though it was showing like 115 on the screen. So definitely got shorted out of a few $100s there. But at the end of the day, $3,000 in 6 minutes is absolutely insane. And that's my goal, right? I want to get in and get out. I'm not going to let greed take over. I want to be consistent. And I mean, $3,000 in 6 minutes, who's not taking that, Unless you let greed take over and you think, oh, well, it's just going to keep running up 100%. Well, that's the thing. It hasn't. So, I mean, it very well could go up some more, but like, I literally sold up here. I think it sold at 12:09 or something. Central time, of course. But the stock market closed in 12 minutes. Bullish is now at $71. So, an amazing trade. I'm very, very happy with how that trade went. Hopefully you guys got into some trades. Portfolio shot up to, I hit $150,000 today. Amazing. And I'll also show you guys the HELOC loan I have as well. But so that's the portfolio, guys. Google puts are doing good. Netflix is Netflix is not doing that great. I mean, I'm still good till 11.90, so I'm like $13-14 in the safe zone right now, but Netflix is definitely having a bad day. So we'll see how Netflix goes. But yeah, everything else is going pretty good, man. I cannot complain about today, Cannot complain. And also, if you look over here, I plugged in the bullish, and that puts us at 8,300 on the month of August already, or almost 6% return for the month. So this has already turned into my best month, and we're not even halfway through the month yet. So this is absolutely insane. We still have like, I think, 2 more Fridays in the month after this. So we very well could hit that $10,000 mark. Who knows? That would be insane. But all right, let's get into that wash sale rule real quick. Where's ChatGPT? Okay. So let's see. I want to show you guys exactly what I was chatting with. All right, so I asked it for a specific scenario, and I said, if I buy a stock at $10 and sell a covered call at $9, which is in the money, while collecting a $1.05 credit, how will I be taxed? So at first I was worried, like, I'm only netting 5 cents per share, right? So I was worried, like, am I going to be taxed on just my net, which is what I would like because that's what I'm technically making? Or would I be taxed on the full $1.05 per share, which is not even what I would be making because, I'm selling for $1 loss. So I would only be making the 5 cents. But I was like, man, am I going to get taxed on the full thing or just the 5 cents? So basically, it broke it down for me. Broke it down for me. Buy stock at $10, sell a covered call with the $9 strike plus 105 premium. The call gets assigned. You sell the stock at $9. And this is another thing with the wash sale. People are like, yeah, but you're selling it for a loss, so the wash sale is going to kick in. You're not allowed to trade that stock for 30 days. Well, within the money covered call strategies, that's not the case. It does not trigger the wash sale because it factors in your premium as well. And that's what we're about to get into. So you get your call premium, you collect $1.05. This is taxable income. Usually, blah, blah, blah. Stock sale forced at $9. So basically, you bought the stock at 10, sold it at 9. So that's a $1 capital loss per share. All right. But your net results, option premium gain $1.05, loss on there. So your net gain is 5 cents per share, or it'll be $5 if you times it by 100. So the 5 cents per share is a short-term capital gain if the position was open for a year or less, which all my trades are most of the time always open for less than a year. So the $1.05 is included in your gain, right? So your net gain would be 5 cents per share, and it is taxed as ordinary income tax rates. Short-term capital gains is taxed just like ordinary income. So I wanted to verify, would I be taxed on the $1.05 premium or just the net capital gain? Excellent question. You are taxed only on the net gain, not the full premium by itself. All right. And then this is the wash sale rule, basically. Okay. Actually, I think it was a little lower, but this is how the IRS sees it. Blah, blah, blah. The call to sign. I feel like we're kind of just repeating this. Net gain 5 cents. So the 5 cents is the only thing that's taxable. And then I asked it, could I do this trade every week or would it trigger the wash sale? Great follow-up. Short answer, no. This strategy does generally not trigger the wash sale rule, as long as you are not selling a stock for a loss. But we're not, because here's why. This is basically what a wash sale is when you sell a stock for a loss and then you repurchase it, the same stock, within 30 days. Then you cannot use that loss to offset some gains on your taxes. So if you do take a loss on a stock, it's best to wait 31 days before you repurchase it. So that way you can use that loss to offset some of your gains, so therefore you pay less taxes. Okay? So, but in your strategy, this is the in the money strategy. Buy 100 shares at 10, sell a cover call at 9, get assigned at 9, net, repeat next week. So technically I am selling the stock at a loss on paper, but I'm offsetting that loss with the premium. Because you're ending each trade with a net gain, no wash sale is triggered. Right here, because you are ending each trade with a net gain, no wash sale is triggered. That is the main thing. We're ending with a net gain of 5 cents per share because the premium added into where I'm selling the stock for a loss. I'm selling it for a $1 loss, but I'm getting $1.05 in premium. So that's a net gain. No wash sale is triggered. Okay? So you can do this trade every week without triggering the wash sale as long as you're closing the position with a gain or a net gain. So you're good to go. That's pretty much the conversation I had ChatGPT and all that. And that's what you guys were wanting to see. So and for the also I can show you guys what it looks like in the thing, right? So let's go a month out. So for instance, let's show you where right here. All right. I bought Meta at 719 and I sold it. I sold a call at 665. That is an in the money call, right? So I sold it at 665 a share. But Robinhood factors in the premium. So if you add 665 plus the premium I gained, Robinhood realizes at, okay, technically he sold it at 724.26 if you factor in the premium. And you see how this is a realized profit. This is the net gain right here. All right, so I sold it at 665, but I got a premium that boosted my break even to 724. So this is the net gain, and it is in one trade, right? This trade is right here. There is no other like loss. Now for spreads, what I did notice is it shows as two separate trades. Okay, so I took a 750 loss and then an 875 gain. So if I wanted to take advantage of this 750 loss, I would not be able to trade Meta until, like September 2nd or whatever. And then that way I can use that 750 loss from the other side of the spread to offset the gains, because I netted 125 from this trade. But since it counts as two separate trades, this would trigger the wash sale if I bought back Meta within 30 days, which I don't think I have, and I probably won't. So maybe I can take this to my advantage. But and same thing with AMD, $60 loss. If I don't trade AMD till September 2nd, boom, this can help me help me with my year-to-date gains of 19,500, minus that 750. Then I'll only have like 18,750 in taxable income, which is, better. $750 I'm not paying in taxes. So that is that. My HELOC, I don't know. I don't want to open my photos because I don't know if it's going to be right there on the front or not. But I also do have the Robinhood credit card, which is amazing. But yeah, basically with my HELOC, I have $48,000. I withdrew. That was all the equity in my house at the time. I did this HELOC I think June of last year. So it's been a little over a year now. And at the time I had $48,000. And the people that I used, the Federal Credit Bureau, whatever, they allowed me to access 100% loan to value, which is very rare. But it allows me to access all of my equity in my house, which is awesome. And I did it last June, but I didn't withdraw any money. I kind of just left it there. I was thinking of using it to get rental properties. I wasn't really sure, but it's good to just have that line of credit open in case I ever needed the money. I had access to money right away. So you can open a HELOC and never use it. That you can very well do that and never pay any interest or anything like that. So my HELOC is an interest-only payments for 10 years, and then after 10 years, I have to start paying towards the principal. So my HELOC loan, I believe, is at like 10.5% interest, and 10.5% interest, and it's $48,000. I think the monthly payment is around $430 a month. I think that's the payment I just did. The first week of August. I try to pay all my bills the first week of the month. But yeah, I believe my payment was $430. And this trade I just made on Bullish right here, I made $3,000. So, that could cover the payment easily for 6 months. And since I'm paying 10.5% interest, right, it's got to be worth it. And by the way, I put that into my account right when I started this. I think I did it you can see, it was right here. This was the first week I did it. Made $950 because before that I was making $360 a week, $190, $460, and then boom, $950, $1,200, $1,500. So I pretty much put it in my account probably the first week of June. And basically, since I'm paying interest on 10.5%, I need to make more than 10.5% or it's not going to be worth it, right? And since my goal is 1% a week or 0.75%, it just depends. If the market's very bullish, then I'm trying to shoot for that 1% a week, which ends up being 60% annualized. My interest my APR is only 10.5%. So I would be crushing that by almost 6 times. And 0.75% is 3% a month. I think it's around 40% a year, which is still crushing it by 4 times. So I seen it for me to be worth it. I'm not saying this, I'm not recommending this for anybody. This is very risky what I'm doing. I'm literally using the money in my house to play with in the stock market, which is very risky, but it is working out for me very, very well. I've already made $25,000. So I've already made half of my HELOC loan back since the first week of June. So 1 month, 2 months, and half a month into August. So 2.5 months, I've already made half of my HELOC back. So to me, it is worth it. But I try not to be greedy. I could have, since this market was so bullish in May, June, and July, I could have easily made double what I was making. If I was selling at the money calls or even out of the money calls, like I was trading SoFi at $11, $12. If I was selling out of the money calls every week on SoFi, I would have easily made double or even possibly triple what I was making. But I was being very conservative, selling in the money, missing out on a lot of those gains because I didn't expect it to just skyrocket 100% in a month or two, but it did. And that's the price you pay when you sell in the money covered calls but I'm not mad about that. I was getting a very specific amount of money and I was very happy with it. And I'm still beating the market right now. I think I'm at almost 16.5% now, or almost 17% year to date. Meanwhile, the market is at around 12%. So even though I've missed out on a ton of money by doing in the money cover calls, we are still beating the market because it's a consistent strategy. And that's why I do it. I make my trades. I think my trades this week were supposed to be like 1162 before I did this bullish trade. And 1162, I was going to be happy with. That would have been probably my first time that I made under 1% a week, but it's still beating that 0.75%, which is my, here, I'll show you. So I got this spreadsheet, right? The interest is what I want to make each week. This is my goal to reach. And this is what I end up making for this week. And these are the expiration dates on the contracts. So my goal is to make 965. We made 1377. So I highlighted in green when I pass my goal. And then I guess yellow if I miss my goal. And then red if I just have a negative week, which I hope never happens. But you can easily mess around, change this. I have it at 0.75 right now. If I were to change this to 1% a week, all the numbers change. And as you can see, I still beat even the 1% a week. So, and then obviously this week so far is at 4,200, which is crazy. And if I ever buy back my contracts, I'll just, update this number. But even 1% a week, I've been beating this. And with 1% a week, my estimated portfolio balance on Friday is supposed to be 143. We're sitting at 150 right now. So we are, portfolio is already on week 11 and a half, but we're only on week 8. So we're 3.5 weeks ahead of schedule right now. But I've done 0.75 just because a little bit more conservative. And that's 3% a month. And that's something I'm happy with. And we are 6 weeks ahead of schedule right now. We're on week 8 and my balance is already on week 14. So that's awesome to me. But if I could just bring in next week $1,056, boom, that hits my goal. I'm happy with that. I'm not trying to be greedy. That's just my goal. And this strategy would annualize me 40% a year, which is insane. 40% a year is awesome. But guys, that's the video. The market is closed. It's 3:05 in Central Time, 4:05 Eastern. I'm about to go to the gym. So hopefully you guys learned something, or if you worry about that wash sale, within the money cover calls, you do not have to worry about the wash sale rule. But with spreads, you do. So I would, watch out with spreads. But that's it for the video, guys. Peace, and I hope you guys have a great day.